All right, good morning, everybody. So we're back at it to do it again. Getting a little bit of rebound around the world. There was some communication, I guess. It's not quite a rumor, but it's not confirmed that there could be factions within the government over there that want to make some kind of deal. So maybe the war could end a little sooner, and that got the market excited, gave us a little bump to the upside, but it's not confirmed yet. It's more than a rumor. It's being bandied about in the news articles, but still it's not confirmed. We're going to get ADP numbers this morning. It's kind of the biggest deal when we look at what we have on the books for today. One of the reasons it's a big deal is because of this discrepancy. Now, on Market Watch, it's 48 versus 22, but if you go to other places, you'll see 50, and I saw 52 somewhere else. So there's a significant difference between the previous number and the consensus estimate or the expectation today. That's a lot of room to miss. Markets don't like surprises. They don't want to be caught on the wrong side, and that could cause some violence this morning. So that's one of the biggest possible outliers today is that. But as always, we just want to watch the clock, right? It doesn't really the thing is, if you haven't heard this yet, it's always worth kind of going back through it once in a while. We look at multiple websites every morning to see what's on the economic calendar. Some sites, like Market Watch, they only focus on the US economic calendar. These guys are only getting the biggest ones. And so if the events for the day don't meet their level of how big it is, then they don't bother putting it in there at all. Other places like FX Street will do a more thorough job, and they don't just do our market, they do markets around the world. And even as thorough as these guys are, they're not getting everything. You could go to every economic website out there, and you probably still wouldn't get them all. And that doesn't even account for which ones are high impact or have a history of high impact and which ones don't. Even if it has a history of high impact, it doesn't mean it's going to be a high impact this time. You cannot get them all. And I would recommend that you don't try because there's just so many of them. The way I built my morning briefing was to make sure, even if I don't know what all of the events are, I can spot warning signs that there might be an event today that I don't know about. That's why we use the various tools like the overnight volume and the market maker move and those sort of things, so that we don't have to scour every single website out there trying to find the economic events for the day. There are way too many. And that's just for the US. When you start adding in nations from around the world who also have the same economic calendar as we do, it's too much. So you'll never find them all. It doesn't hurt to look and try to find the biggest ones, though. And make no mistake about it, just because they're not on the list doesn't mean they're not important. QRA, for an example, is almost never on the list. Even though I've petitioned all of these websites for years to add it to the list, Finance Juice is the only one that has added it, and I doubt it was because of me emailing them every year. And QRA is a real big deal, right? It happens quarterly, and most places don't even cover it, which is why a lot of you are probably sitting there wondering, what the hell is QRA? So we don't have to get them all, but you do want to look around and try to identify, what you can. And then just remember, it's the government. They're lazy. They're consistent. Half hour, new hour, sometimes on the quarter hour. All right, like this morning at 8:15, we're going to get that data. So when you're watching the clock, right, and it's 11 or 11:15 or 1 or 1:15, what new economic event is happening when that bar opens? Because it's going to be on a half hour, a new hour, a quarter hour. And a lot of times you can see it in the volume, even if you don't know what event it is. And it can be something as boring as the amount of grain in the New York harbor. Yeah, that's a thing. Or it could be as impactful as QRA. So here's I'm going to just call it a rumor. It's not a rumor, it's more than that. But here's the headline: Iran intelligence signals openness to talks with the CIA. So that idea that the war could end a bit early got a little bit of green juice into the market, but we've got to get through the ADP employment report. So we'll see how that goes. Yeah, they offered Navy escorts and insurance for the Gulf carriers, and still not getting a lot of traffic moving through the strait. It's like they just don't think it's worth the risk. White House risk today is still relatively low, all things considered, so we're not really expecting much out of the White House this morning. 35's a pretty low score, all things considered. All right, the put wall rolled down a little bit, which makes sense because we've been challenging that lower edge enough that it rolled down. It was kind of a toss up whether we were going to get the roll down before OPEX or not, especially since we've been holding in this range forever. The thing is with this range, getting that put wall to roll down is step one for getting the hell out of this range. Now, I'm not saying that we're going to get out of it, but we would need that put wall out of the way if we were going to leave the range. So it's moving in the right direction. I don't think it's moved far enough, but it's a good start. All right, so it's down to 6,700. That's slightly lower than the low of yesterday, and it's still above the 200-day moving average, which at this point, if we break yesterday's low, that 200 is going to be a really good target. So 6670, and we might as well overshoot that because we're running 50s and get into 6650. To have 6650 on the table, we have to get below 6750. It's level by level, right? Always is. So we don't open 6650 until we've cut underneath 6750. Right now, 6750 is open because we're underneath 6850. In fact, that's kind of what we rejected off of last night when we hit the 3-day moving average and we started dancing around the 0 gamma level. So this range is still intact. It's same old, no change. And as for participation last night, it it faded a little bit compared to what we saw Monday and Tuesday, but we're still well above average. The average number is about 50 something, and so 196 is significantly more than that. This is one of those things that I've started using over the years to help try to identify if there's something really big on the economic calendar. Generally speaking, if something really big is on the calendar for the morning, there will be a lack of participation because they'll sit out in front of a big event and then we'll see a market maker move. It's kind of a two-part piece, right? So this is just overnight volume accumulation starting at midnight until this morning. There's nothing to it except just looking at it every day for years. You kind of get a feel for it. If you search on Thinkorswim, you'll find it. Just search volume. It's overnight volume. It won't look like this because I pimped that one out a little bit, but I did share that indicator as a part of this chart setup. It's in the YouTube video description. So, if you want any of these charts from the morning briefing, just go watch the replay and then look in the video description. And while you're there, like and subscribe, please, because I'm trying to grow that YouTube channel out this year. It's my New Year's resolution. All right, we didn't hit the upper ADR. Close isn't close enough in this case. It's not to say that we have to go up and hit it, but generally speaking, if we interact with one side early enough in the day, we can go to the other side by the end of the day. Now, if we look at the RTH of yesterday, that's what we rejected against. We wasn't able to get through there. They defended it, and so we didn't get to the ADR half. On the fade, after the second attempt, we've pulled back a little further than I would like if we was going to continue to run to the upside, and we're checking the midpoint now. So, of course, we break that mid. We're going to come back and test the low. And at that point, we're about the same distance from the low as we was to the high. When I see this sort of situation, this distance and this distance, it makes me wonder about the calculation that gave us these lines, right? Average daily range. We're looking back over a 21-day period, and we're asking, what was the normal move, top to bottom, that the market made over the last month? And of course, if we get a lot of big days, the range will expand. And if we get a lot of narrow days, the range will contract. Right now, it's at around 105.5. 2 weeks ago, it was in the 90s. So it's expanded considerably. So far this morning, we've kept an almost equal distance from these ADR lines. We got to get out of this box. This is starting to feel a little bit like a hurry up and wait scenario. I think we're looking at a market that's waiting for the data to come in before it makes a decision. And yet it doesn't seem to be concerned about the data because we're not seeing additional hedging. We didn't see them sit out last night. The volumes weren't light. And the range, although we're still sitting inside of our ADR zone, the range is decent. We've had a decent travel down and move back up. We didn't sit in a tightly consolidated little zone. So everything looks pretty normal. If they're worried about ADP, it's certainly not showing up in any of the tools that we use. At this point, though, we have a decent gift. If we cut the mid, target the low, get through the low for the ADR half, Through that, we target yesterday's low and then the full ADR. The other way around, get through yesterday's RTH high, our own Globex high, then the ADR half, then yesterday's high, and then the full ADR, which would be a breakout on the week, I believe. I don't think we had a higher point. Yeah, that'd be a breakout on the week. 69.11, Monday's high, would be getting higher than any other point this week. It's not higher than last week's levels, but we'll deal with that one thing at a time. That's bearish. Price opened above it. That's bullish. They kind of cancel each other out. Today's channel is significantly more narrow than yesterday's channel, but it's not as narrow as it could be. You can see on Monday we had a much more narrow range, and it can be even narrower than that. Right? It can get so narrow that you only just see a purple line. You don't even see a channel. So today's channel doesn't look, so narrow when we give it that kind of consideration, but it is narrow, all things considered. When we have a wide channel, it implies that a breakout won't hold and we'll just come back in again. And when we have a narrow channel, it implies that if we break out, we could actually keep it and grow some legs and just keep right on going. Keep in mind that these channels don't make price do anything. We won't break out or fail to break out because of a channel. And if we do break out, we won't keep it or give it up because of the channel. This channel is just helping us try to identify the likelihood of getting a breakout and whether that breakout sticks. So with a narrower channel, the implication is that we could potentially get a breakout today and that it could grow some legs and we can just keep on going. To put that into consideration, Monday was a breakout of Friday's level. We took it for a ride, but we came back in by the end of the day. Tuesday was a breakout of Monday's level. We took it for a ride and we came back in. Those were breakouts that failed. They didn't stick. We didn't keep it. This narrow channel implies that we could break out and keep it. Of course, Mondays also implied the same thing, and we came back in anyways. So take it with a bit of salt. Because of the narrow restriction from last night, we really didn't do anything. R1 is sitting right underneath the weekly floor pivot, and S1 is just above yesterday's high. So we've got some structure here. Both of them look like they're either in yesterday's range or really close to it. I mean, that's just really close. So we don't even need a breakout to get to S1 and R1. And hovering around the floor pivot the way we are, it doesn't even owe us a trip to S1 or R1. They're about as useful at this point as the ADR is, although they are a little further than the ADR half. So we would hit the ADR, get through that, and then we would hit the SNR level. We don't have an MDP because we've been crossing back and forth through the daily pivot multiple times last night. So we got nothing at this point. The distribution for the week, kind of a classic D shape. We got a little bit across the highs up here, but unless we go back up there to fill it out, then it's likely that this week ends up a lot like last week. We had a bump on the upper end, but we had most of the distribution in the lower part. That's what this week is shaping up to be, and that is a bit bearish, really, all things considered. Having that distribution and then leaving it all behind, especially in this situation where the point of control is in the lower part of the week. so it's not quite the B shape, but that's what it would have formed if we'd have stretched it out a bit more. So we've built this zone out some, but we want to focus on the value area high, the value area low point are developing our distribution right now. We don't really have anything back there that's going to help us out. The one level that we was keeping track of right here is for this distribution. We worked on it there, and then we worked on it here, but we're done with that now. That's 67.80. I guess it is still down there if we make a move back, but we traveled through it so extensively that I just don't see 67.80 having any value other than the 80 used to be a cog line. All right, so keep that in mind. It's an old school cog line, but still. $10-day, 30-minute volume profile and TPO. We got a relatively narrow value area, all things considered. We're still working on all of the drama that built this channel, and at this point, we got nothing. If we try to make a move to the upside, 68.76 is over our head. We're going to have to deal with that. And if we drop back down, then it just gets really, really thin. So, we move through thin areas easier than we do thick areas. So, one way to look at that is the path of least resistance is lower. Now, I'm not saying we're going down or that we have to go down, just that that's the easier path right now for price to take. There's less stuff down there. If you think about what's overhead, we got all of those moving averages, all of the pivots, the levels, the points of control, all that structure and drama. We don't have a new VPOC from yesterday since we've cut through that zone multiple times, but we still have one from the 2nd of March and from February 26th. So if we make a run to the upside, we're still going to need to deal with those levels. We're still maintaining the weekly expected range. All good here. Nothing to really focus on. We're below the 10-day, but not by more than 1%. We got down into that level yesterday, and it's holding. You can see if we look back, there's plenty of examples where we got down into this zone, and that was all we needed, and then we came back up again. So for the 10-day, we haven't moved too far too fast. We're not overextended. It doesn't owe us any sort of move back. And the same thing for the week, right? We are 1% below the 10-week. That's nothing, really nothing to it at all. We've been much deeper than that in the past. We're not oversold. We haven't moved too far too fast, and it doesn't owe us any sort of mean reversion. And that makes sense, right? Because we haven't done anything. We haven't gone anywhere. So if you don't travel anywhere, then you can't get overextended. Even that deep drop yesterday, we unwound it and came right back up again. It's worth talking about that depth anyways, because we want to evaluate how that candle closed. What I just marked here was yesterday's high and yesterday's low and the midpoint. Yesterday closed above the midpoint, which is better than closing below it, right? It's not exactly bullish, but it's not bearish to close above that midpoint. So far today, even though we got below the midpoint at some point yesterday or last night, we're still above it this morning. So that is a level that you want to keep your eye on. Staying above the midpoint is not as bearish. So we get below that, the bearish weight starts to pick up a little bit. And then, of course, we just run things level by level anyways. But it's hard to have any bearish bias when we're above that midpoint of yesterday. So looking at what's down, we got not a lot really. All things considered, especially what we've seen Monday and Tuesday. So the VIX is down 1.5. But look, I mean, it was up, what, 26% in a 5-day period? Of course it's down a little bit. It needed to pull back some. Nat gas is down 0.75%-ish, but it was up 6.5, almost 7% in a 5-day period. So, these were things that had really stretched itself to the upside in the last 5 days. And at some point, markets just need to pull back. So I wouldn't read too much into the things that are down this morning in that list, considering how much they've run up over the last 5 days. It's very likely the same thing is going to be said on the other side. Looking at what's up this morning, Bitcoin is up more than 4.5%, which means it was down about 6% in a 5-day period. It's still down this morning over a 5-day period, but still, we'll take it. It's up. Gold miners, junior gold miners, chips, metals and mining, uranium, China, Mag 7 up. Volume is up. So this is a good spread. If we were looking for market breadth, trying to answer the question of if we're going to break out today, where's it going to come from? We've got the breadth this morning to get that done, at least looking at these. Of course, we can quantify that a little bit by putting some numbers behind it. That's not going to get it done. What we're looking at here is the S&P 100, and we're asking how many names this morning in the S&P 100 are up at least 0.5%. What we was looking at was ETFs, ETNs, and baskets of stocks. This is just straight up stocks. We can see that chips make up a large part of this list, and certainly chips have the juice, right? Like the Mag 7 has the power to get us to break out and go. But this isn't overly bullish. I'm not seeing 10 out of 100 and thinking, oh wow, I'm crazy bullish over that. So I'm gonna need a rising tide scenario or spread this out into the other sectors that we need for a rally. Financials, technology, consumer discretionary. Those are the rally sectors that we need. We don't need all three. Sometimes two can get it done, like tech and consumer discretionary, or tech and finance, finance and consumer discretionary. But we ain't got it here. So let's see what the NASDAQ has to offer. 27. Yeah, I mean, that's a little bit better. We're looking for that rising tide scenario, right? That's going to lift all boats. This ain't it. So we're going to need more juice. And that's if we get a breakout to the upside today based on market breadth. Because at this point, we don't have the breadth to do that. It could be a breakout to the upside today because of VIX collapse. So keep your eye on the VIX. If the VIX breaks down, that could get us a breakout. FX markets, commodities, if oil takes a hard shot to the downside, that could help us out, get a breakout. Dollar, treasury, That's the thing that we want to focus on this morning is if we're going to get that breakout, where's it going to come from? And at this point, we don't have anything that's going to give us that juice. So the only good out of that is if you have nothing and then you get something, well, that's a lot easier to spot. You don't want a rally day based on airlines and pot stocks, right? You're going to need like the Mag 7, technology, communications. So keep your eye on the heavy hitters, large market cap names, the Mag 7 group, and collectively the indexes themselves, right? They'll band together. So that'll help. Having Bitcoin up this morning is good. It's a universal symbol of risk. If they're willing to take risk in that, then they're willing to take risks in other things. But I'm not seeing the other things that I'd really want to see. USO, IPO, those are really good small cap ETFs that are a nice tell. We don't have those. So if we're going to get a breakout and a rally to the upside, what we have now isn't going to get it done. That's the main takeaway. Maybe after we get into the open, we'll get some 0-day flows, some dealer positioning, and that could provide the juice to get it done. But as it stands, we just don't have anything that's going to rock us. This is a really clean setup, nice gift. So as it is every day, get out of the box, right? It's always that. It's as simple as that. Yesterday's RTH high and then all of yesterday's high. The RTH low and all of yesterday's low is the same thing. So there's just one level down here to deal with, but you do have the Globex low to deal with. So all things considered, this is easy to deal with. Get out of the box. At this point, we also still have yesterday's 111, one of my favorite trades, right? All we got to do is break out of yesterday's range. And at this point, look for the reversal back in because there's nothing that says that a breakout today should grow legs and run. How we approach yesterday's high or low, how we approach yesterday's edge is really going to matter, especially for that question of should the breakout stick or not. At this point, we don't have any reason to believe a breakout would stick, but that could change between now and the time we really get a breakout. So, want to continue to reevaluate and consider why would we get a breakout that grows legs and really runs at this point. Remember, we got ADP. It's in about 10 minutes. So the numbers are really wide on ADP. Look for the market to get caught off sides. Other than that, we don't have any real drama. Nothing really coming out of the White House. Should be fairly decent day. Be careful. Be safe. Keep your eye on the clock. I'll see y'all tomorrow.